Invest your retirement funds in rental properties, raw land, even commercial buildings, all while maintaining the tax advantages of an IRA. How? All you need is a self-directed IRA. Hi, it's Ben Tushman with the Entrust Group. Let's cover the basics, benefits, risks, and rules that you need to know before investing in real estate with a self-directed IRA. First, is a self-directed IRA the same as a real estate IRA? Well, yes and no. The truth is, a real estate IRA doesn't really exist. It's a marketing term that attempts to convey that your IRA funds can in fact be used to invest in real estate. The real term of art that we like to use at the Entrust Group is self-directed IRA or SDIRA. A self-directed IRA is simply an IRA held by a custodian that has the infrastructure and expertise to allow you to invest your IRA funds in alternative assets, like real estate, precious metals, private equity, and more. Here are some of the benefits of investing in real estate with your IRA funds. 1, tax advantage growth. If you're already invested in or interested in investing in real estate, why not use your IRA funds to defer or entirely eliminate taxes on rental income and capital gains? 2, potential for higher returns. If you pick the right property, which is easier said than done, your rental income and property appreciation might outperform the stock market. Number 3, income potential. As you approach retirement years, having consistent income becomes even more important. Rental income as a steady cash flow source can be invaluable for those types of investors. And 4, asset diversification. It's often considered the only free lunch in investing. Once you've invested a portion of your retirement portfolio in real estate, if the stock market plummets, and it's not really a matter of if, it's a matter of when, that doesn't mean your portfolio has to plummet too. Of course, no investment is without its risks, and investing in real estate with an IRA is no exception. Here are some of the top things to consider. Real estate expenses. Property taxes, maintenance, and property management fees can add up in a way that they really don't with other types of investments. 2, market risks. Economic downturns and vacancies can impact rental income. And 3, strict IRS rules. If you commit a prohibited transaction with your IRA, that can result in significant penalties and potentially entire disqualification of the account. Just to follow up on those rules, here is a brief, non-exhaustive overview of the rules as they pertain to real estate. You cannot live in, vacation at, or personally benefit from any IRA-owned property. Real estate expenses must be paid directly from your IRA. You can't pay out of pocket. And 3, rent and profits must go directly back into the IRA, not your personal bank account. While the rules can seem complex at first, if you have experience investing in real estate, you want diversification from the public markets, and you're generally comfortable with an elevated risk profile, investing in real estate with your IRA funds could be right up your alley. So, how do you get started? Well, it's pretty simple, actually. First step is to open and fund a self-directed IRA. Before purchasing property, you need to set up your account. Now, there are 2 primary types of self-directed IRAs: traditional and Roth. With a traditional self-directed IRA, you gain pre-tax contributions and tax-deferred growth, though withdrawals are taxed as ordinary income in retirement. In addition, once you hit age 73, you have to begin taking required minimum distributions, or RMDs, each year. With a Roth self-directed IRA, there's no immediate tax benefit when you make a contribution. However, you do gain tax-free growth, tax-free withdrawals in retirement, and there are no RMDs. Now, once you've opened an account, you have to fund it. There are 3 main ways. 1, transfer funds from an existing IRA to an IRA of the same type at the Entrust Group. For example, you can move funds from a traditional IRA to a traditional self-directed IRA, or you could move funds from a Roth IRA to a Roth self-directed IRA. The second option is to roll over the funds from a previous employer-sponsored plan into a self-directed IRA. For instance, if you have funds sitting in a previous employer's 401k plan, you can move those funds into a traditional self-directed IRA at the Entrust Group. And your third option, of course, is to just make cash contributions, though those are subject to IRS annual limits, which for traditional and Roth IRAs can be quite low. Next, it's time to choose your investment strategy. There are 4 common ways to invest in real estate with a self-directed IRA. The first is a direct purchase. In this case, your IRA buys the property outright with cash. This is the simplest method and avoids any risks related to taking on debt. The second option is partnering with other investors. Your IRA can actually co-invest with other IRAs or individuals to share ownership of a property. Profits and expenses are then divided based on ownership percentages. The third option is using a non-recourse loan. Since you can't personally guarantee a loan for an IRA, that's actually against the IRS rules, you'll need a non-recourse loan to take on debt in order to finance a property purchase. Non-recourse loan is a type of financing where only the property serves as collateral. So if your IRA defaults, the only action the lender can take is seizing the property that was financed. They can't go after any other IRA-held assets or your personal assets. There is one key consideration you need to know before taking out a non-recourse loan with your IRA, and that is that if any IRA-held property is debt financed, rental income may be subject to unrelated business income tax or UBIT. The fourth option is investing via an LLC. Setting up an IRA LLC gives you checkbook control, allowing you to write checks directly for real estate transactions, reducing reliance on your administrator. Once your self-directed IRA is funded, it's time to find the right property. Be sure to consider multiple investment properties and conduct thorough due diligence on each one. Once you're ready to purchase, make sure to ensure the property title is in the SDIRA's name, not yours. For example, that might be the Entrust Group for the benefit of Ben Tushman, IRA, and then your account number. And submit purchase documents to your IRA custodian to make sure everything is in order and we keep your records for the IRS. Finally, once your IRA owns a property, you have to follow the IRS rules carefully to maintain tax advantages. For example, income and expenses must flow through the SDIRA, and you cannot perform repairs or manage tenants yourself. For a broader overview of the IRS rules, be sure to check out our blog post, 7 Essential Self-Directed IRA Real Estate Rules. We'll link that in the description. If you want to learn more about investing in real estate with an IRA, download our free guide, 5 Steps to Investing in Real Estate with Your Retirement Funds. Or if you're ready now, you can open your account online in less than 10 minutes. All you need is a copy of a government-issued ID and 10 minutes of your time. We'll link both of those options in the description. And finally, if you enjoyed this video, let us know by giving us a like and a follow. And if you made it to the end, let us know by leaving a comment. Something funny like, what does the pirate college student say when his resident advisor tells him to stop throwing parties in his dorm? IRA.